Christian, let's talk about the emerging markets in 2013. Will they lead or will they follow the U.S. like they did in 2012?
Well, in 2012, they did follow the US because they have actually underperformed the US market. For 2013, I think we might continue to see some underperformance because we need a return on equities in emerging markets to go up. From a growth point of view, though, emerging markets will definitely lead the US. I mean, we are expecting growth of approximately 5.6% in emerging markets against 1.7% in the US. So the growth outlook looks much better for emerging markets.
All right, let's go through the BRICS one by one, if you don't mind, and start with Brazil. Now, Brazil has always been tightly linked to China because they send their commodities there. Will that link be intact in 2013?
Well, commodity is very important for Brazil, but it's not the only story. In fact, what we're looking at Brazil now is the consumption story. There has been a lot of credit expansion in the country, and the authorities are absolutely focused on getting the consumption story going for 2013 and beyond. They're also very focused on the infrastructure side of development of the country, especially with the Olympic Games in mind and the World Cup very soon. So what we like in Brazil is the infrastructure sector as well as the consumption sector, which will continue to go well.
Moving along in the BRICS, Russia is tightly connected to oil. That's the tight link there.
Yeah.
So we had falling oil prices in 2012, and we didn't hear much from Russia in 2012.
Yeah.
Will that change in 2013 if oil prices rise?
Well, hopefully it will change because Russia is extremely cheap. Russia is trading at 5 times earnings. Russia is at approximately 0.7 of book value. So we think it's actually probably the most interesting market in the BRIC context.
India continues to disappoint. A lot of people thought it would be just like China, a fantastic market for European and US companies, but it's been disappointing people for a long time now. Will that change next year?
I think it will because the earnings growth in the country is actually really good. It's the best out of the BRIC countries. So we are expecting 15% earnings growth at very, very interesting multiples. From a historic point of view, we're probably at 12 times earnings. So India is definitely a place that we favor.
And then finally, last but not least, China.
Yeah.
Now, China has a brand new government, but there's still talk about a bubble popping over there. What's your view on China?
Well, a brand new government, but people that have been aware of corporate matters and economic matters for a long time. People more open, we believe, than the previous generation. And we think that they are actually very focused on what will make China more productive. So making China more productive is focusing on higher value creation and capture of part of this creation. So we actually also like China in a global context.